As we know, purchasing in life, we often confuse it with buying or shopping. And shopping is all around us. It is like, you know, doing shopping in a supermarket, and you collect your stuff and you go to the register and you pay, and that's what we call buying. Well, our story is not about consumer buying, but it is about organizational buying behavior. It is about how to buy for professional purposes, how to buy for companies. And when we talk about purchasing, it's important to define the scope of it. And as I see it, purchasing relates to everything that a company gets an invoice for. Everything that you get an invoice from suppliers or service providers is called purchasing. It's not necessarily the activity that is limited to the purchasing department. It's a much wider concept. And when we look at what companies buy, we can identify 4 different kinds of stuff that is being bought by companies. The first type of products is the products that are used to sell to other organizations of consumers, retail products and merchandise. And what we see is that it relates to a wide variety of products. The second category of products are those products that are used to assemble final products, raw materials, components that are used by manufacturing companies to assemble a final product and sell it to final customers. The third category of products is used to manufacture these products. These relate to investment goods, to information systems, to software packages that involve a lot of money, and that money is depreciated by the company over a number of years. And the fourth category of products are all the products that are used to support the internal services and activities of a company, facility services, marketing, cleaning services, and that kind of stuff. And of course, in the average company, when we talk about purchasing, we talk about a huge variety of products and services being bought. And the question is, of course, how to deal with it in an efficient way. To give you an example, if you look at Philips Electronics, this is a company that in 2011 sold for about 25 billion euro. Purchasing was about 16 billion of that. And that 16 billion was spent over 28,000 suppliers worldwide, even more than that. And there were over 2,100 buyers of Philips involved in that activity. So the question then is, how do companies like Philips of this size, how do they actually organize for efficient purchasing, and how do they organize this activity in such a way that it really contributes to the competitive advantage of this company and the competitive strategy of this company? Now, when we look at the money that's involved with purchasing, we see differences across industries. In the retail industry, purchasing easily may account for 60 to 85% of the sales turnover, whereas for pharmaceutical industry, it may relate to 25 and 50% of the total sales turnover. So we see vast differences among different sectors. So there is no one recipe to organize procurement because it will be different in different industries. And as the picture also shows you, we immediately can identify, say, direct purchasing and indirect purchasing. Direct purchasing is related to all components that are being bought to be part of the product that's going to be sold. Indirect purchasing is everything that's being bought for so-called support activities, back office activities. And this is in fact the total purchasing expenditure. And the question is how to deal with all these different categories of products. Now, in doing that, companies organize through purchasing using different concepts. The first and the most simple concept that we use is called ordering. Ordering is something that is placing an order with a supplier accepting his sales and conditions and terms. The second concept that's often used is buying. And with buying, we do something else. We compare different bids from suppliers, and usually we choose the the one with the most attractive bid. Now, purchasing is another concept that's being used, and what we do there is, of course, we ask different quotations from different suppliers, but we also challenge the specifications of the customer. Is the specification, the product that we are going to buy, really fit for purpose? Are we not over-specifying things here? The fourth concept that is being used is what we call procurement. And procurement is, we not only look at the acquisition price, the price that we pay for the product, but we also look on total cost of ownership. And that's important when you would, for instance, buy a printer. We all know that printer price, the price of a printer is very low. But if you compare that with the cartridges that you're going to buy over the life cycle of that product, of that printer, you will spend a manifold on cartridges rather than the printer. So it's important to look at total cost of ownership. Another concept that we use is sourcing. And what is sourcing? Well, sourcing is an activity where we choose the best possible supplier for our requirements, not on a national scale or a regional scale, but on a global scale. And then companies, when pursuing a sourcing strategy, some companies may find out, for instance, banks in Holland may find out that the best source of supply will be in India. So we outsource the entire IT activity to India. That's sourcing. And of course, more risks are related to it. The next concept is what we call supply chain management. And this is a concept where we say, okay, we realize that behind our supplier, there is also a whole range of suppliers that need to be managed and where efficiencies can be gained. And this is very popular, for instance, in the car manufacturing industry, where even the car manufacturers make deals with the steel manufacturers to deliver their steel to the manufacturers, the suppliers of exhausts, for instance. And then the final concept is what we call value chain management. And this is entirely different because there we're going to generate and mobilize the expertise of our suppliers to help us deliver better products to our customers. So what we want our suppliers to do is become very customer oriented and to think in line with us about how to improve our products for our customers. Value chain management, very important concept. And what we immediately see is that these concepts are different in nature. The first concepts are much more short-term oriented, operational, they are deal-oriented, they are pretty traditional, we all can do that. But the modern concepts, the concepts at the lower end of the picture, are more strategic, long-term. They have a supply chain orientation and are much more performance and value-oriented. And they take much more effort to implement in a relationship. On the other hand, they also contribute much more and deliver much more value to companies. So purchasing relates to every activity the company receives an invoice for, and the way in which it is organized depends per sector, per company, and companies have different options. And when they go from the simple concepts to the more advanced concepts, what will happen to the profession? It will become much more teamwork. Purchasing will be much more integrated into the business. And what will happen to supplier relationships? Well, supplier relationships will become much more intensive and collaborative rather than competitive. And what will happen to the supply base of companies? And that's what we see in these companies that adopt these modern concepts. The number of suppliers, dramatically decreases. To cite an example, DEF Trucks in 1986 had 3,500 suppliers, for the manufacturing of trucks only. And today they have less than 400 suppliers to do that. And they deliver and produce 4 times as many trucks as they did in the past. So there's a lot of change at hand. And this video has illustrated a few things. One, we gave a definition of what purchasing really is. Second, we defined the scope of our series of videos, that it's all about organizational buying behavior. Third, we saw that the products that are really bought by companies are represented in a vast variety. And fourth, we see that in order to give shape to this activity, companies can use different concepts. And it's up to your company what will be the best concept to use.